Well, Elizabeth, thank you so much for being here. How you doing?
I'm doing well. We're hopefully pulling ourselves out of the 2026 snowcrete in DC, which has
Yes.
been quite eventful, but I'm warm inside right now.
Good. Are you able to access your cars? Are you guys snowed in?
We're 1 for 2. We have one car, and I'm taking a page from my old Chicago days where we have a chair that's marking our territory for the parking space we have dug out.
Oh my gosh.
Because
Well,
it was
I
it
heard
was
up.
it was hard won to get that spot cleared. So
Oh man, nice. Well, you earned it.
yeah.
Well, I would love to unpack your journey to where you're at now, working at TruStage. And I mean, let's be honest. I think you've probably bagged the coolest job in the entire organization. Would you give us a little genesis on your background?
Yes, I'm happy to. So, I mean, if we go way back to when I was in college, I feel like probably today's youth, I feel really old in saying that. Like, I feel like today's
The
college
youngsters of
students
today?
know so much more about different career paths and kind of blazing their own trail. When I was in college, I honestly didn't know much. So I had joined this women in business club, and somebody came and gave a presentation about investment banking, and they're like, it's this incredibly challenging, demanding job, but you can learn a ton. It gives you great training. And so I was like, okay, I've always loved challenges. I was an econ major. I was a math person. I was like, I'm going to go for that. So I did my internship and then my first full-time job out of college in investment banking. And it was as advertised. It was a great training ground. I learned a ton. I learned to be analytical and be able to read and, you know, write a financial model. But I think even at that early time, I started to do this exercise of looking at people who were 10 or 20 years my senior and saying, do I want to be in their shoes one day? And
Yeah.
I didn't like what I saw in terms of the work-life balance that even senior investment bankers had. I felt like it was a very insular profession where people thought anybody who left investment banking was not worth talking to. Um,
Like they were quitters, just like they
Yeah,
couldn't
if you
they
can't
couldn't
hack it
hang.
in investment banking, you're a loser. And I was just like,
Yeah.
I don't want that to become my
Ouch.
pet mentality and my persona.
Sure.
And so I got to get out of here. So I ended up transitioning over to wealth management, where I liked what I was doing day to day a lot. I was on a very small team that was directly investing in equities and fixed income on behalf of our clients. So I got to do both a macro, like what's happening in the economy, what do we think are some trends that are interesting to dig into and invest in, but then also some bottoms up, like individual company analysis, who is the street underestimating, whose margins are actually improving, like where should we be looking for some value to put into our clients' portfolio. So I loved getting to know different industries and sectors. I was a generalist, so I was learning about, water utilities,
Mm.
master limited partnerships in the energy space, but then also investing in the Cokes and Pepsis of the world. So it really fulfilled my curiosity. But as I again reflected on, what was I doing? What end was I working towards? Ultimately, we were serving very wealthy clients and making them wealthier. And I had a grandmother who had been a widow. She had a very small, Social Security and retirement income that she was living on. And I was helping to manage her portfolio for her to make sure she was getting enough dividends and interest that she could sustain her life. Um, and we as a team were going to invest in a tobacco company. And she had been a smoker her whole life and she ended up getting lung cancer. And I was like, I don't feel comfortable investing in this company on behalf of my grandmother, but I also don't really feel comfortable investing on behalf of anybody's grandmother or anybody's parent. Like if this is something that I don't personally align with from a values perspective, I don't want to be doing this for my profession. So that's what,
Was was that the first moment where you were like, "Ooh, like ethics and
yeah,
morals and
yes,
investing,
yes,
like
yes.
this is a thing I'm thinking about now."
Very much so. Yeah.
Yeah. Okay.
And just having that clash be, there was a tangible personal example that I was having to make this decision about. Because I think in the
Okay.
abstract, you can examine these things, but when it then becomes real to you is when you really have that deeper reflection. And so that's when I decided to go to business school to try to figure out how to pursue a career with impact. And I honestly didn't know what that was going to look like. I thought I was going to walk away from the world of finance because to that point, I hadn't seen impact and finance intersect in a way that felt sustainable to me. But I did get to know about impact investing when I was at school. I got to actually do a project for Acumen, which was one of the early pioneers of impact investing. And they had been focused on emerging markets and international opportunities, but they were
Mm,
looking at launching a domestic US fund. And so some business school classmates and I got put onto this project doing consulting for them to examine the US landscape for early stage impact investing, and actually especially in the sort of economic opportunity financial services space. And so that's what really made me think like, okay, there is something here. This is a very nascent market, but I think there's opportunity to still operate within capitalism and investing in for-profit companies, but companies that we think can be impactful to society and to, benefiting people's quality of life.
okay.
Um, and so that's what got me on the impact investing train. And then I was at a firm called Impact Engine for about 6 years, where we were investing in early stage software companies building in education, healthcare, economic empowerment, and environmental sustainability.
Okay, so quite the background. So you earned your stripes with an undergrad in hand, wanted to go deeper, went to grad school, came out. You were working in an area where you had exposure to a wide cross section of industries and really got to round out what you know. And then did you fall into the banking credit union space, or how did you make your way to TruStage?
Yeah, I mean, I think financial services have been a through line for me throughout my career, having been in investment banking, wealth management, and then investing in fintech companies at Impact Engine. I was in wealth management during the 2008, crisis recession, and just saw how people were so impacted by what was happening with the financial markets. And so
Right.
that lingered with me. Like, how can we make financial services more affordable and accessible to everyday Americans? How can we protect people, help them build their wealth, and, create the generational legacy and support for their families? So that had been something I was interested in even when I was at Impact Engine, although I was investing in other sectors as well. And at some point, I decided I wanted to help start another fund from the ground up. And I was very sort of passionate and interested in that being in the financial services and fintech space. So that was when I had the opportunity. To be honest, I didn't really know much about credit unions. Um, but when I joined TruStage, I was really excited to be part of creating a new fund that was focused on very early stage companies in the fintech space, focused on financial inclusion. And as I got to know more about credit unions, that part of the puzzle really resonated with me too, because they occupy a unique place within the financial services landscape, given that they are
Right.
nonprofit financial institutions and, serving their members and serving their communities is at the core of their identity. And just this whole notion that like credit unions are the sort of anti-predatory financial institutions. And I think they just have been left behind a bit when it comes to adoption of technology and, compelling kind of marketing and digital outreach to younger generations. And so I saw that there was a really big opportunity to use the tools of some of these fintech startups to help credit unions kind of better live out their mission and serve kind of that next generation of members who may not have been aware of credit unions, or maybe they had a parent or a grandparent who had been a member, but they weren't
Right.
taking advantage of what credit unions have to offer today. So I feel like it made sense to me from a strategic perspective. Like this is an area where there has been or there will be opportunity, because I think credit unions as a whole have been neglected or underinvested in when it comes to technology.
Sure. I mean, they're an underdog narrative there, right? From a technology front where they've been maybe playing catch up a little bit. There's a lot of very small credit unions, a lot of,
Yeah.
hyper localized institutions out there. So, no, that makes sense. I think that's really cool. So you came in, you started up the Discovery Fund,
Yeah.
which is aimed at minorities and female founders, correct?
Yeah, so we've broadened the mandate a bit since we started. So today we invest in CEOs who are people of color, women, LGBTQ, or veterans. We added veterans in the fall, so that's a
Cool.
new category. Yeah, but
Okay. Okay. Awesome.
each of those groups, receive substantially less venture capital funding than they represent demographically in the population. So for, Black and Hispanic entrepreneurs, it's somewhere in the neighborhood of 2% of VC funding goes to each of those groups. Women, unfortunately, the number like hovers, but actually has gone down. So it's now less than
Mm,
2% of VC funding is going to all female led teams.
shoot.
LGBTQ, we don't have great statistics on because there just hasn't been a lot of measurable data, but definitely underrepresented. And then veterans, same story, like not a lot of great tangible data points, but they tend to actually have higher rates of entrepreneurship than the general population, but lower venture funding that goes to veteran founders.
Oh, interesting.
Mhm.
Okay. So I guess, the piece with a declining population of female founders, I'm sure there's all sorts of systemic challenges, but even just entering the ranks of motherhood creates challenges when trying to come back to work and have time and the space to launch something. I mean, launching something is anything is terrifying and and so hard and fraught with risk and danger. And yeah, no, so I guess I get that. And but it's too
Yeah.
bad that it's decreasing like that.
Well, I would say, just to make sure I clarify the point, we don't necessarily know that the rate of women starting companies is going down, but the rate of funding they're getting is going down. So I think there are still plenty of women who are pursuing entrepreneurship and starting companies. They're just not getting VC funding that's sort of keeping up with the general rate of how VC is growing. So,
I
and
see.
actually, I don't have the exact numbers, but I think to your point about like the workforce not being accommodating of like people entering parenthood. I don't know if it was this past quarter or this past month, like women left the workforce in the largest droves that they have in quite some time. I think even
Oh wow.
post pandemic, we're just seeing this continued tension of employers and corporate culture not being accommodating of the needs and the demands of parenting, especially young kids. I think you and I, as parents of young kids, both know. I mean, sick days, school holidays, summer breaks, it's
Oh
all logistically a lot. And I think when
yeah.
you have two parents working in a household, like at some point things start to break.
Yes. Yeah, absolutely. I mean, basically, like we are just under heavy fire, man, from
Yeah.
responsibilities and challenges. And anyways, like I know I'm totally preaching to the choir here, but I think it's also just a really tumultuous time for people in like the white collar world is just going through such an identity crisis around how it wrestles with staffing numbers, efficiency, AI, and earnings, and that I think just really puts a lot of pressure on families and people trying to work in the white collar space. So,
Yeah. Yeah.
well,
We're definitely, if not already in, on the cusp of sort of that new frontier of like, how does AI impact the economy at large, but, industries and people's jobs? Like, I think in many cases it can be a tool, but in a lot of cases, I think there's fear from entire swaths of the white collar industry of like, is my job going to be redundant when AI can do what I do?
yeah, yeah, exactly, exactly. Hey, on that note, I don't know about you, but I'm in need of a little refreshment. Do you
Absolutely.
think?
Yes, I've got mine here too. Cheers.
Oh, cheers. So, do you want to? There's an interesting story with you in this company. Do you want to tell us a little bit about it?
Yeah, sure. So, I mean, as we've talked about, I've been in VC for over a decade now, and probably over the last 2 years, good.
Very good,
um,
very good. Highly recommend it.
yeah, over the last 2 years, I think, especially since I became a parent and I've continued to invest in and see the statistics around funding to female entrepreneurs, I was like, I want to just start to put more of my personal money behind companies I believe in. So I started to explore angel investing over the last few years, and I write very small checks, but I think that has been made possible because of how the angel scene has evolved. There's a lot more platforms now that are making it more cost effective for companies to form SPVs and enable angel investors to come in with small checks kind of collectively
Love
as
that.
one entry on the cap table.
Okay,
Um, so I have focused on mostly women-led companies. I've made a few investments in non-women-led companies, but about 80% of my angel portfolio is women-led companies. And it's everything outside of fintech, just so I don't have a conflict of interest with what I do at
sure,
TruStage. But I've been interested in things that I would personally, enjoy as a consumer. So Dessois is a great example of that. I actually stopped drinking when I turned 40. It was like, it's just going to be healthier for me. Um, and got to know some of the non-alcoholic brands and products out there,
yeah,
became a customer of Dessois, and then had an opportunity to invest in an SPV for one of their rounds they raised probably like about 2 years ago. And it's just been really awesome to see how they're doing and how kind of the non-alc movement has taken off. And, we just finished up dry January, but I'm
cool,
seeing actually even today a lot of people on LinkedIn saying like, I didn't make it in January, but I'm going to try for February, or I did make it in January and it went really well. And I'm going to kind of keep
nice.
pushing and see how long this goes. Um,
Love it.
so yeah,
And so there's also the kind of a well-known investor with this organization.
one of the co-founders of Dessois is Katy Perry. Um,
Okay.
uh, so
Well, Katy Perry, if you're watching this and you want to sponsor the Propagate Fintech Podcast, let me know. We can work something out.
yeah, she I think has been and continues to be a great brand ambassador, but the day-to-day management of the company is the CEO is a woman named Scout, and she's been awesome. She gets a lot of kudos for how Dessois has been making some big, waves in the industry.
Yeah, that's awesome. I know millennials are trending away from alcohol big time, and the subsequent generations after us even more so.
Yep.
Anyways, I wanna get a sense on your instincts around investing. How do you distinguish kind of the signal from the noise on bets that you're gonna make in this space?
I think it's, yeah, both the hardest question and the easiest question for early stage companies, because with early stage, which is where I play, there isn't that much to grasp onto from a business like evaluation yet, because they oftentimes are just getting into market. They're kind of very early with their revenue. So there might be some kind of glimmers of product market fit or, adoption or traction, but they're sort of, yeah, you don't know yet if they're signals or if they're noise. Um, and so a big thing, kind of a big part of what you're betting on with early stage is really the founder. And it's highly likely that whatever they're pitching you today is not exactly what the business is going to be
Sure.
in 2 or 3 or 5 or 10 years. But is the problem that they're going after one that you think is a big problem that has a big market opportunity? And do you think the kind of first iteration of the solution is enough for them to get a bit of a foothold? And then really the big thing to evaluate is, do you think they're learning oriented? Can they take feedback? Are they really listening to the customer and what they need and what they want? And can they kind of adapt their product to solve those needs? And that's not to say that founders should be listening to every customer and kind of tweaking the product every day, because then you end up with things that are way too customized and not scalable. But
Mhm.
I do think it's important to evaluate companies and their founders for, like, are they tied to the solution or are they tied to the problem? And are they willing to adjust the solution when the market tells them, like, you thought this was the problem, but actually this is the problem, and here's how we want it
Mm.
solved? And I think, one of our jobs from a diligence and sort of evaluation perspective is to get to know the founder as well as we can in a short period of time. But part of the way we do that is by talking to other people who have known them for longer, whether that's existing investors in the
Oh,
company.
interesting. Okay.
Yeah. So I
That's cool.
definitely take references very seriously. So existing investors in the company, um, advisors or board members, if they have them, maybe former coworkers, like people who can
Mhm.
speak to who this person is. Do they have that drive? Do they have the grit? Are they like really committed to working on this? They can't imagine them doing anything else. But also that they're, a good person, that they want to form genuine relationships. So I don't take those reference calls lightly. Like those are very important.
Okay.
And
So
I
be
think,
careful which of your former roommates you tee up
yeah,
to do the interview.
yeah. Well, I think, um, I think it also speaks to, as the founder of an early stage company, you have to wear many hats and play many
Right.
roles, right? And so y- you have to be the chief salesperson. You have to be the person that's going to attract your early hires. You have to be the fundraiser. And so seeing who you've already been able to bring to the table, whether that is early people that you've hired, compelling industry leaders that you've been able to convince your company is one worth advising, or same thing goes with investors, like, who you have sold on your vision is a big part of how you're probably going to do in the future.
How do you see storytelling capabilities fitting into the success factors of one of these investments?
I feel like it's more important today than ever. And I think you could probably speak to this too as you're helping companies with storytelling and marketing, right? I think AI plays a role in this as well because we're very much in a kind of media saturated culture now. Like everybody has access to real time everything. But then AI came along and initially people were like, wow, this is amazing. And I think it is amazing for plenty of use cases. But I think people were initially excited at the content generation of AI, like, oh, I can, have it write my LinkedIn posts and I can have it write my blog posts and my emails. And like that seemed like kind of a cool trick initially. But now a lot of people can sort of discern and identify what has been written by AI. And so I think authentic
Yeah.
voices and authentic storytelling becomes even more important because we've just kind of exponentially increased the amount of content that is out there. And so, like, authentic, genuine content that connects with your unique story that only you can tell and your unique connection with your audience is going to be more important than ever. And like, you have to really prioritize and emphasize that storytelling to be able to kind of get above all of the noise that's out there. Which I think it's true no matter honestly what industry you're in, whether you're an entrepreneur, whether you're an investor, whether you work at a Fortune 500 company, everybody has to become a better storyteller, which I think is a good thing because,
Absolutely.
communication has been and should remain one of the most important human skills we have.
Absolutely. You look at what TikTok did to every social platform out there, short form content has become the king
Yeah.
because for better or for worse, probably for worse, honestly, the just like flickability of
Hmm.
of flying through content is so ubiquitous now that the appetite for long form anything is really decreasing. And so, if you can get out there and tell your story with conviction and gumption and be doing it in short form content for wide audiences and having it diffuse across LinkedIn and, whatever, we all kind of got to become content creators in some capacity today.
Yeah. But I think, you know, how you mentioned you're kind of doing your podcast plus the short form, I think having the combination is the right approach because I do think the short form stuff is sort of the teaser that gets maybe the wider audience interested, but then you have the longer form conversation like we're having today,
Right.
where if somebody is interested, they can dig in and kind of get a more substantive reflection on a particular topic. So yeah, I mean,
Yeah,
it
absolutely.
it is it's great for people who gravitate to this kind of work. It does require a lot of people to flex a muscle that they might not have felt as comfortable with in the past. And again, I don't know how much of my LinkedIn, is similar to what other people's is, but I see a ton lately of people being like, posting is cringe. You got to get through cringe valley, like,
Oh my gosh, cringe
um,
valley.
there's just yeah, because everybody
Yeah, it's
recognizes
so
this is
true.
kind of becoming a standard requirement no matter what you're doing.
Yeah,
But
yeah,
everybody has to get over that feeling a little bit of like, do people really want to hear about this? Do I have a voice that is unique? Like, what is my perspective? What's my point of view?
yeah. Yep.
And I think
What's my
everybody,
style?
yeah. And I think a lot of people are going through that at the same time. So as much as you might feel uncomfortable with it, there's a lot of other people that are feeling equally uncomfortable, and everybody is so concerned about what everyone else's perception is, but everyone's kind of worried about themselves. So like just if anybody's listening who's thinking about should I be posting more, the answer is yes, and you just have to start.
Yeah. Yeah. You know,
The-
I heard a crazy stat that if you post once a week on LinkedIn, you are in the top 4% of users.
yeah,
So it doesn't take
yeah,
a lot. Doesn't take a lot. And most people, 96% of people are lurkers,
yep,
that
yep,
are out there.
yep,
So which on a side note, Elizabeth, you've done a great job on LinkedIn. I mean, I see high quality content that you're producing about your hot takes on things and perspective on stuff. I mean, you're active on there, which is great. And we really all should be. I'm trying to work on it. We've Propagate launched a couple months ago, and we've been fortunate to have already signed some business, and we're getting after it. But producing content where you're just looking straight into the iris of your camera and trying to bring, like, who you are into that capacity is really very tough.
yeah.
And, my 13-year-old I'll have her come look at stuff, and she's like, "You sound like a robot. You need to you need to read." She's like, "You don't talk like that.
I know.
What are you doing?"
Yeah, that little dot comes on and it somehow just like everybody
Yeah.
gets the deer in the headlights thing.
Yeah, yeah, absolutely. And I think, we all kind of came up in an environment where, you had to be professional
Yep.
and, it's like, well, now I'm talking about banking and I need to be a certain way. So yeah, no, that's a great opportunity. It's a great opportunity to differentiate and be your genuine self. But it's a challenging exercise, which I'm actually really enjoying. Let me shift gears here a little bit. I want to just get your take on which fintech verticals are you most excited about or have the highest potential right now?
I'm just trying to think about what's in our pipeline right now. I mean, we tend to be opportunistic versus thesis driven. So we're not necessarily going out and saying like we're going to spend our entire quarter on X sliver of financial services. We're kind of,
Yeah.
evaluating things as they come. I think um stablecoin has been a big topic within
Mm.
financial
Oh
services and
yeah.
fintech at large. So I would say, as a sneak peek for your listeners, maybe expect some stuff from us on stablecoin in the next few months. Um,
Okay. People are kind of touting that as like the harbinger of doom, stable coins. So I guess you're skating to where the puck is going.
no, I mean, again, you know, to this point about credit unions being left behind,
Yeah.
at some point you can't be the one that's left behind, right? So I think,
Yeah.
yeah, skating to where the puck is going, exploring how credit unions could participate in stablecoin in a way that isn't maybe going to bring the entire industry down, but in a way that aligns with credit union philosophy, but makes something accessible to their members that they would otherwise have to go into other parts of the financial services industry to access. So why can't credit unions play kind of
Sure.
the good guy role in that space? I think that's one topic that we're spending a lot of time on. And then I think, the kind of age old conundrum or situation that we seem to be unable to get ourselves out of as a society is middle class and lower middle class Americans. Like the issues of financial affordability just continue to get worse and worse. And so, how can
Yeah.
we look for creative ways to harness either existing products and kind of tailor them to new audiences or innovate with new products altogether that help protect people when they're skating into sort of the danger zone. So one of the companies we invested in late last year was a company called Denzen, and they're hopefully coming to market in the next quarter or two. They are working with property managers and landlords to offer an insurance product to tenants that will basically pay their rent for up to a few months in the event that they are laid off.
Mm,
So it's kind of like private unemployment insurance specifically targeted at housing costs because housing is one of people's biggest expenses. And,
sure.
whether you're the tenant or the landlord, like if you fall behind, it really kicks off this sort of vicious cycle of you get kicked out, but then there's high turnover costs for the landlord of trying to fill that unit. And it would actually be better for everybody if the tenant could stay in place. And so having an insurance policy gives that buffer of protection for both parties that can keep somebody in place as they're going through that job search and hopefully finding a new position within the next few months.
Denzen. I love that concept, and I think that's because the middle of the country is shrinking, and because it's shrinking, it's under pressure, and so they need help, and I think
Yeah.
that's great. So is Denzen, are they reaching out to landlords and property owners? Is that kind of the crux of growth for them right now?
Yes. Yeah. They're trying
Okay.
to go through those big aggregate supply controllers, whether they're the owners or the operators, so that they can reach consumers at scale.
Mm. What a cool the partner executive part of me is coming up with all sorts of ideas there. That's really interesting. Maybe we can have them on the pod at some
They
point.
would love to be on the podcast, I'm sure. Yeah.
Awesome. What about AI? I mean, as an investor, I imagine it's a thing that you need to keep your eyes peeled for.
Yeah.
But I guess talk
And
about
that's
signal and noise. This
yeah, I
is
was about to
big. This
say
is huge right
that
now.
signal and noise is sort of like the headline of AI.
Yeah.
And I think
Right.
the topic has been top of mind for everybody, credit unions included. And there's been a lot of like acknowledgement or awareness of we need to adopt more AI, we need to incorporate more AI. But I
Yeah.
think now we're getting to that next phase of like, okay, there's been a lot of talk. How do we actually implement? And so I think what we're working with our portfolio companies on and also looking at prospective new investments in is how can they actually do kind of practical application of AI with the appropriate guardrails that are required for financial services. I think there was kind of this initial frenzy and rush of like, using Chat GPT and using all of these general
Right.
purpose AI platforms. But when you are talking about financial services and sensitive information and a lot of regulatory requirements that credit unions and banks have to adhere to, you do need kind of more purpose built solutions um, that understand the industry that they are working with. So I think credit unions and other FIs are kind of grappling with like they're now seeing tons of volume of providers in the sort of generic AI solution space, but now they need, and we're actually even seeing this at TruStage, like they're starting to recruit talent who can help think through again that execution piece, that if we sign this partner or this vendor, how do we actually start to deploy this throughout our organization? And I think that's going to take a lot longer than maybe the most bullish people out there think. Like, I think AI is definitely happening and it's an inevitability and it's going to be incorporated into a lot more of our processes. But I think when you're talking about enterprise deployment, it's a much slower process than some of these startups think or would hope.
Yep. No, absolutely. Tactically applying it, getting the team to adopt it, being flexible in how it's applied and used. It's a challenge. It's classic change management
Yeah.
issue. Let me draw you out a little bit on supporting your founders. Obviously, this is critical, especially looking at how big TruStage is. I don't think a lot of people understand how successfully kind of diffuse their products are across a credit union market, especially, but even into the bank space. How are you able to use some of that breadth to support your investments?
Yes. And I think we're going to be even more intentional about that going forward. So I think there's a lot of ways we've been able to plug our portfolio companies in both with TruStage and with the ecosystem of credit unions we have relationships with today. We have facilitated at this point thousands of introductions between our portfolio companies and credit
Wow,
unions,
nice,
many of which have been kind of like fruitful and executed upon. But we also have some distribution partnerships, some formal distribution partnerships where TruStage sales executives are kind of up to speed on what a few of our portfolio companies are doing and are actually going out and selling on their behalf to their credit union customers.
nice.
And then just, yeah, within the organization, within the enterprise, we're continuously thinking about what are our strategic priorities and how can we use some of our portfolio companies to help us achieve those, whether that's, we're going to embed TruStage products into some of our existing portfolio companies because those portfolio companies give us exposure to a consumer that we're trying to reach, but we haven't necessarily gotten to at this point. Or, partnering where some of our portfolio company products are using TruStage as part of their offering. So we definitely continue to think about and iterate on ways that we can be supportive. And I think, in today's VC environment, you do have to bring something different to the table when you're trying to get into competitive rounds with companies that are ascending. And I think the nice thing about the position we sit in is we do have that access to credit unions. So when fintechs are thinking about or actively pursuing relationships with credit unions, we can help open that door for them and then actually, walk them into certain rooms.
That's awesome. And I mean, as a founder, that's a dream come true to be part of a kind of mass scale distribution model like that, where there are literally thousands of relationships that TrueStage
Yeah.
has that they can pair their portfolio up with. So that's if anybody's looking for investment, TrueStage is an excellent place to stop, I think. Elizabeth, last question for you. When you look at 2025, who would you say were the top two biggest winners in your guys' portfolio?
Um,
I
one
hate
of
to
them,
make you pick favorites, but
no, it's not going to be a favorite, but it is going to be 2025 was a great year for them. I would say Hello Divorce was one of those companies. So this is a company we invested in several years ago, initially set out to build kind of the TurboTax for divorce, helping people go through what's a typically contentious, lengthy, and expensive process, giving them some of the tools to get through it, at a much faster pace and at a much more affordable cost, but also giving them access to sort of the human resources that they might need to give them both confidence and reassurance along the way. So, they had started as a direct to consumer model initially, which is when we invested in them. But I think 2025 was really their breakthrough year in starting to form some enterprise partnerships, selling to, major Fortune 500 companies as an employee benefit, and then also partnering with some legal benefits providers to give access to this to, again, employees that are purchasing legal packages through their employers. Really great year for them. I mean, obviously, nobody wishes for divorce as an outcome, but it is a
sure,
reality for, roughly 50% of marriages in the US. And so giving
right,
people the tools to feel like this is it's often ranked as like one of the top two worst experiences you can go through. And so trying to just give people the tools to make that a better process that they can come out the other end of thinking like, okay, I made it through and I feel like I was
right.
supported and had, you know, the tools to do that. So I think this was a big year for them and I'm excited to see what 2026 has in store for them. Trying to think who I want to pick for my second
One
one.
more. Who do you got?
I'll go with Debbie. Um,
Okay,
so Debbie is another company we invested in very early pre-seed. Um, and they are trying to basically create a reward structure for saving the way that the rewards industry for credit cards has sort of dominated over the last decade. So instead of being rewarded for spending, Debbie wants to create a structure that rewards people for saving and for positive financial behavior. And they do that by enabling people to earn rewards that are cashed out with their partner financial institutions. So they have a number of credit unions that they're working with and some other financial platforms too. But by doing streaks and by doing different behaviors around debt pay down or savings or different financial education modules, you can earn real money that goes into accounts with a partner credit union or other financial institution. And
very cool.
for the partner financial institutions, the amount of rewards that they're paying out to these consumers is still substantially less than their typical customer acquisition costs. So, you get these flyers in the mail that are like, open a Chase account and we'll give you $300 if you keep the account open for 3 months. Debbie is enabling these credit unions and FIs to pay well below $300 per user, but they have been able to demonstrate that these consumers are very sticky once they open these accounts, and they continue to earn rewards in these streaks, that it can help them both with acquisition and retention, especially of kind of the millennial and younger generations, which are demographics that credit unions are very much seeking these days. So yeah, 2025 was a great year for them, where they finally kind of got some significant momentum around credit union adoption, and excited to see where this next year takes them to.
Well, Elizabeth, thanks so much for coming on the show. It's been great to have you.
Likewise. Thank you, Roland. We'll talk soon.
Hey, thanks for being here. If you or someone else you know would like to explore coming on the show, fill out a contact form at propagatefintech.com, and we can explore some content ideas with you. Also, we are an end-to-end marketing and PR firm only supporting the bank industry. So if you would like to explore going deeper with Propagate, again, feel free to reach out to us and we can explore whatever that you are working on. See you on the next one.